All right, so everybody thinks that we're going into a stock market crash, stocks are going down, we're done for, interest rates are going to kill us. Now, I love it personally when stocks go down. Contrary from other YouTubers that like to be little pansy bitches, when stocks go up, they get all happy. They like to show their little YouTube portfolio that happens to have a bunch of winning stocks. On this channel, we want stocks to go down, and especially when it's amazing businesses. So today, I'm going to be sharing 3 stocks that I've been eyeing recently. Some of these companies are in my portfolio and some of them are not. I'll be telling you all that. And by the way, if you guys didn't already see, I ran a poll basically saying if you guys would like to see more of this kind of content. I'm trying a bit of a different style today. The 3 stocks I'm watching or whatever. I personally just don't like making these videos. So I'm trying a different style today. Let me know your thoughts on it in the comment section. 35% of you guys wanted more of this. So I got to appease to the 35%. Let's get into it though, regardless. Stock number 1, Starbucks. I think this is the obvious one if you guys have been watching the channel, but Starbucks has been on an absolute tear downwards recently. But over the long-term time horizon, which a lot of people don't like to pay attention to, Starbucks has just done really nice appreciation-wise, and they're also a very shareholder-friendly company. Solid growth, solid buybacks, solid dividends, everything you like for. From a qualitative aspect, I really like Starbucks as well. I have a whole playlist I'll feature in the description box of why I'm so bullish on the company. There's about 15 videos on there. So if you're looking at it right now, I think that's a solid playlist to go over because I really talk more in depth about like quality wise, why I love the company so much, how it kind of acts as a bank, how I think a lot of these short-term issues that they're dealing with are stupid. But essentially right now, some big things that are kind of plaguing them sentiment-wise, which was the reason the stock is going down. China, unions, and boycotts. And I think all 3 of those are very temporary short-term issues and has led to Starbucks trading below where they're intrinsically trading at, should be trading at, in my opinion, at fair price. I have about a fair price on Starbucks, 130, 140. And I understand that's in a perfect world, but this is a company that has consistently grown their cash flows. There's a lot of growth potential in China. And I do believe eventually, if their earnings start reflecting, they can have the consistency in their free cash flow and the China growth really starts accelerating. And people kind of realize it's stupid that China will take over all of Starbucks property and, shut everything down. I think then the stock will eventually, correct to its appropriate price. But I really like Starbucks right now. Currently, they have a dividend yield of 2.67%. They've been growing that dividend as well. For the future, when it comes to dividend growth, I'd assume a lot of this growth is going to be funded through China. So that's a big thing. If you're not comfortable in China, probably not the stock for you because a lot of the growth potential in the future is coming from China. Revenue per share, very solid metrics all around, but obviously revenue means nothing if the free cash flow is not there. We can see right now the free cash flow, it's been a little inconsistent, but over the long term, it's trended up. I think you're going to see a lot more consistency, especially with the pricing power they've shown recently in their business. All the good stuff that I talk about when it comes to Starbucks stock. But we can see over the last 5 years, more specifically, when their free cash flow just consistent. They obviously had that dip in 2020, 2021. They had to close stores because of the pandemic. But I think as China kind of opens up, this isn't like the most ideal thing that you want to see when it comes to free cash flow. You look at a company like Visa or Google, they haven't seen free cash flow. I think Starbucks is one of those cases where you are kind of betting that the free cash flow will eventually look like that one day. And I think that could be another reason for potentially trading at a bit of a discount right now. But a 10-year growth rate on the free cash flow of 10.63%, that's something you definitely do want to see. Do not pay attention to the 5-year CAGR because 2019 was an anomaly year for them. Just do not pay attention to that, whatever. And obviously 2020 happened then after. When it comes to debt, Starbucks carries a bit of debt. This is store leases. If you actually understand what you're looking at on the balance sheet, really no issue whatsoever here at all. So that's just store lease. A lot of the time you'll see people crying about debt when it comes to like any business, like retail business, and they cry, oh, the debt is too high, I'm not going to invest. Like, it's store leases. It's crazy how people really don't know what they're talking about when they're looking at a company's financials. Stock-based compensation is fine. Dividends, they've had very solid dividend growth recently. They had a 7.5% hike last year, and over the 10-year growth rate, a 15.93% growth rate. So very solid dividend growth there. Buybacks are another story with this company. I'm really excited to see in this upcoming earnings report how many shares they'll be buying back. I'm assuming they will continue to buy back a good amount of shares, especially on this decline. 2020, they bought back 4% of shares and 11% of shares in 2019. So very good stuff to see there. All right, Starbucks is stock number one. Now, I told you guys there was a company that I didn't own that was going to be featured today, and that's Home Depot, which is quickly getting down to where I'd actually like to potentially add and start a new position. I've made a Home Depot stock analysis video where I go a little more in depth on it, but essentially, I just think they have a very strong moat over the home improvement. They're in a duopoly with Lowe's. I like the fact that they have a better track history in terms of growth compared to Lowe's, which is the reason I preferred it over Lowe's. Lowe's has kind of had like the UPS effect, I call it, where they have 2 crazy years of, growth. I prefer the company that may have, less growth, looking in the short to medium term, but historically has proven that they're good with that. I think Home Depot's management is strong. I think their brand value is very strong. It's reoccurring, and I'm sure as I begin adulting, I will be going to Home Depot every other Sunday. I really do like Home Depot, though. I said that 320 was a price I'd like to get in at. I had seen it got up near like $400 recently, and it's kind of been on a downward trajectory since. Obviously, I would assume kind of retail's fallen recently. I would assume this is due to macro conditions. I'd have to look deeper to why it's actually been falling recently. I'm going to ask our Discord members, link in the description, about that. I know Matt, or my boy, the Dividend prop, he loves his Home Depot. Very strong company regardless. Also, long-term trajectory with dividends. 5-year growth rate of 16.91% and a 10-year growth rate of 19.15%. I don't know if I'd expect that to continue in the future, but very solid regardless. Looking at their payout ratio relative to their free cash flow, 46%, very solid, and they've continued to grow it. So all good stuff when it comes to Home Depot. I think if I can get this company at the right price, I'd be very happy. Shares outstanding have continuously gone down. They reward the shareholder through buybacks, and they've been buying back shares pretty aggressively recently. So definitely another shareholder-friendly business. Looking at, their price to free cash flow, historically at least, it's at a 19.8 right now. We could see that a few years ago it was at a 27, so it could be on a potential dip. I hate running DCF models. I think that's one of the stupidest things ever, but it gives you a good estimate of where it could potentially trade at. Once again, go check out that Home Depot stock analysis video if you like to learn more about Home Depot, but it's getting close to my price where I could potentially start a position. So keep an eye out there on my Twitter at Ryan Dangler Show or the Discord link. Oh, and surprise, the last one is Vici. So interest rates have really been kind of killing this company in the short term. And I think interest rates are a great short to medium term buying opportunity for great businesses. Vici offers not only solid dividend yield, but also some quality growth as well. They're sitting at a 6.11% yield right now, and they've grown that dividend as well recently. They're investing into other assets besides Las Vegas when it comes to like geographical, exposure. So I think that's something that was a big knack on the company a few years ago. They currently have a dividend growth rate at about like 6 to 7%, and they haven't even been around for 10 years, so there's not a lot of long-term data there. I would expect that to potentially slow down. I don't think they'll be able to maintain like a 10% growth rate for a REIT every year, but they are a very well-ran business. I think that their growth potential is very solid with some of the properties that they are investing in. I have about a fair price, 30 to $35 on Vici. I would probably lean towards higher to like the $35 range. I just think it's a really strong company. Interest rates are really the only thing that are driving it down right now. Qualitatively, it's doing fine, and it's pretty much undervalued by any metric that you look at. Obviously, I'm not going to look at like shares outstanding when it comes to Vici because REITs dilute, believe it or not. And lastly, when it comes to like price that I'm continually adding Vici at, man, 27.15, that's a really good price. I've been adding under 28. I've been boat loading my money on Vici, and I'm trying to be a little more conservative with the cash in case we actually go to a dip. Recently this whole little World War III thing has got me scared that stocks were going to crash and I wouldn't have enough money to fully opportunize off the dip. So I've been a little nervous recently, but I've definitely been adding a whole lot to Vici recently. I'm going to be a little more patient with this one. If I can get it below 27, I'll definitely add more. Roughly about $1,900 worth of my $23,000 portfolio. So a core holding for sure. I'm getting a really big dividend from them every quarter, which I'm happy to reinvest at these prices. All right, those are 3 stocks that are on my watch list. 2 of them are in my portfolio, and 1 of them are not. If you appreciate the video, make sure to become a channel member. Shout out to all my channel members: Parker, Ritz, and Redwood. I appreciate you all. A lot of stress off my shoulders there. Thank you guys so much. Bunch of awesome perks for them. You can ask them in the comment section even. All right, thank you guys for watching. Check out the Cash Flow Kings every Saturday, 8 p.m. Eastern, and have a good one. Do Dividend Stocks, Hot Drugs.